Hello there and welcome back. I'm Natalie MacDonald and you're watching Sydney Direct. Melbourne Mania continues. Up next, I've got Senior Market Analyst at ThinkForex, Matt Simpson. Matt, thank you very much for welcoming us into your office today. Thank you.
Hi Natalie, good to see you.
Thanks very much. Okay, now firstly, Aussie bonds eased off after the Fed appeared cautious, as it were, with regards to a rate hike in the new year. What sort of driver really is US Fed policy playing within the Australian markets at present?
Well, it's actually been a key driver for the past 4 weeks since we broke out of the 92 to 95 range. People are buying on the anticipation of rate rises. They're not waiting for the rate rises to come themselves. And I think what's going to happen as we get closer to this period of time, I suspect might have a little bit of a disappointment. And there's a lot of people holding dollars in anticipation of something happening. If that doesn't happen, they'll be throwing the dollars back at the market. So that might even help support the Aussie dollar. But right now, it's not only what the Fed's doing that's driving the Aussie dollar. We've also got terms of trade. So we've finally seen the Aussie dollar catch up the terms of trade, which is falling lower. You've also got falling commodity prices. And people were known for a long, long time that the Australian dollar is overvalued compared to commodity prices. And we've also got risk on, risk off. So whenever there's a risk off environment like we're seeing now, this morning even, we're seeing the Kiwi dollar, Aussie dollar was selling off across the board, and that's bringing further downside pressure. So there's all these key components that, depending on what's happening throughout the week, the focus will change. Now, thankfully, as the greenback has been strengthening, that's tailed off and that's helped support the Aussie dollar. And I think we might actually see a bounce this week on the Aussie dollar from the current lows.
You mentioned commodity prices, and in fact, what knock-on correlation has this had on commodity cross Aussie dollar to the CAD, a pair which, in fact, you've said could see further downward pressure in the coming weeks?
Yeah, I think there was further downside there, and at the moment we have actually found a slight support, so we've already bounced off those lows today. You can also look at the US dollar CAD as well to help give us a proxy. Now, at the moment, the correlation between US dollar CAD and Aussie CAD is very, very strong on the 20-day correlation. So when US dollar CAD goes up, Aussie CAD goes down. However, US dollar CAD has hit resistance level. So I think we're going to be seeing some sideways trading there. This is going to help support Aussie dollar CAD as well. But on the weekly charts, I think we do have further lows. We could be looking around the 93 level over the coming months.
Now let's start with a look ahead then also. Next Tuesday we'll see the RBA meeting minutes released. Have investors really exhausted all that there can be from this meeting policy, or is there more still to be gained?
I think they've exhausted what they can from a trader perspective. If you're looking to trade the actual release, you might be a little bit disappointed. It's very difficult to get more than 20 pip moves sometimes from what comes out from those minutes. There'll be particular focus on anything to do with macro-prudential tools or maybe some more details, but after 40 months of nothing happening, you're getting used to nothing happening now. So my strategy would be to don't expect too much. And really, you just need to, it's more of a nice to know, but it's not going to be a great thing to trade, is my guess at this stage.
We also had a private gauge of inflation figures. Didn't look too bright either. How does that bode ahead of next week's inflation release?
I would expect it's going to also come in softer. So we've seen the previous three quarter on quarter, they have come in slightly softer and below the 2%. Now remember, we want 2 to 3%, but we're not even getting that at the moment. So if it's soft, again, it's not going to be a huge driver for the market itself. But if we're not getting inflation pressures, then there's not going to be any need to raise interest rates, and that's what it always comes down to.
Matt, thank you so much for your comments today. Really appreciate your insight.
It's a pleasure. Thank you.
Well, that was Matt's forecast for next week's inflation report, but why not have your say by going to the Dukascopy TV Facebook page and leaving your comments there. That's all we've got time for right now. Goodbye.